For the first time in history, oil prices dropped below zero, effectively turning oil from asset to liability. On 4/20, future oil prices closed at a negative $37.63. So what exactly happened? Who was responsible? And did we just fill our gas tanks for free? What's going on, everybody? My name is Jose from deepdatainvesting.com. And today I'll be going over what happened on that Monday on 4/20. Now, of course, the root of the market dropping in general is because of the global pandemic that's going on right now. But there's many contributing factors to what happened that Monday on 4/20. Because of the lockdown, we are not traveling. And so there's less fuel consumption, which directly impacts the global demand for oil. It was already bad enough that there's no demand at all. But a bigger problem arises when production gets ramped up. So where did this number of negative $37.63 come from? Well, the price comes from future contracts. Now, a future contract is a legal agreement to buy or sell at a specific price in a future date. Future contracts can be traded at all hours of the day until the future contract expires. These trades are done by speculators who have no intention of taking delivery of the oil, but the idea is to buy this contract in hopes that oil prices jump up and they can sell at a higher price in the future. The last person to hold this contract will expect to take delivery of the oil. Now, since the demand is so low and the supply is overwhelmingly high, no one wanted to buy oil, causing the price to drop. At this point, suppliers had to pay to get rid of the oil. Supply and demand. This is a basic principle of economics. When demand is high and supply is low, prices shoot up. When supply is high but demand is low, prices plummet. So let's talk about supply. Now, the Organization of the Petroleum Exporting Countries, or OPEC for short, is an organization of 13 nations who make decisions together, such as production output. This organization is beneficial for everybody so that oil prices remain at a healthy level and everybody can profit. Now, all members of the organization are expected to follow the established guidelines. However, when the whole pandemic started affecting the economy, there was a feud between two members of OPEC. Despite the best interest of OPEC to lower the oil production, Russia refused to cut production down, and this caused Saudi Arabia to start a price war. The goal is to cut prices so low that its value is less than the cost of production, which effectively destroys profits for the other members. Now, keep in mind, Saudi Arabia is the lowest cost oil producers in the whole entire world, and that gives them some leverage to cut its oil prices so intensively. So this caused a surplus of oil in the market, and there was just simply nowhere to store it. So that caused oil storage prices to go up. This meant nobody wanted to buy the oil, so prices just plummeted to the negative. Okay, so to sum things up, the global pandemic affected the whole entire global economy and caused people not to travel, which led to less fuel consumption, which directly impacts global oil demand. Russia refused to cut its oil production, so Saudi Arabia starts a price war. Soon, there was so much supply that there was nowhere to store it, and oil storage costs skyrocketed. Nobody wanted to buy this oil, so oil started plummeting. So what does this mean for the future? Well, future contracts are in the positive territory now, so there's some hopes that demand of oil will increase. Now that businesses are starting to open back up again, people are going to be traveling more, which will lead to an increase of fuel consumption, which will increase oil demand. No one can perfectly predict the future, but what we can do is prepare, do our due diligence, and use your best judgment. As you can see, there's many contributing factors, dimensions, all types of things that we have to take into consideration. So just analyze all the components. So thank you guys for joining. Please give us a like and subscribe to Deep Data Investing. We'll see you next time.